Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, February 5th, 2020. What we'll do here is start out with a quick look at the broad markets and then cover a couple commodities and some of the individual trade ideas that we've been focusing on lately. This is SPY. So the biggest thing today that I've noticed is this gap up above, clear breakout above that 329-ish level. I should round that off there on this chart. We'll call it 329. Like I said, it doesn't have to be exact. That is the top of the gap right here from that gap down on Monday the 27th. January 27th, came up, backfilled the gap, pulled back, tested and closed on it again yesterday and popped up. So there's, at this point in time, it is, it's a technical breakout or near-term bullish development. So there's no reason, in my opinion, to either short here or add any shorts. While one could certainly go long, and if you do go long, it's like anything else, go long, don't get married to it. Strategically, if you went long here, you'd want to stop somewhat below that level, give them enough room to maybe run the stops on a pullback. There's also a gap right there. I think that'd probably be your good level there, right there. I'm talking the top of yesterday's gap up. Now, it's not a long entry that I would chase. Again, it's about risk reward and also profit potential. We've got trades, there are up many trades, 20, 30% or more, and still going. And yet, what's the upside on SPY from here? I think the upside potential, despite, resilient trend, is limited, especially, in the next few weeks. So, and add to that, you have also a couple other things that would keep me from going long here, or even for that matter, still closing out my shorts. I have still a starter short position on the Qs. I may close that out by the end of today if I don't see what I like, and that it means more downside before the close. Let me show you what I'm looking at here. Number one is, of course, like I said, that breakout, but we do have the trend line. This is that key trend line off the October 3rd low right there. Enough reactions to certainly validate it, and so right now we have as today's action is, you can certainly say near-term bullish because you gapped up above support. We're still trading above it, but as of now you have what could prove to be just a breakdown and a back test of the trend line, because we haven't, remember, SPY never back tested that trend line yet, and followed by a reversal and another leg down. So if I had to bet, that's the way I'd go, but I wouldn't bet right now. That's what I want to see. There's a difference of already having a position and, again, a small starter position, which I will not add to unless I see additional bearish evidence here, something like that, or impulsive rejection off there. But if I didn't have any position, why? There's no reason. There's plenty of other fish to fry, again, with better risk reward profiles, meaning the amount of profit potential compared to the downside risk, if you go in objectively, as well as profit potential there overall, again. So we'll get to some of those in a second. So that's SPY. QQQ. Remember, QQQ did break out above the comparable level right there. That was the gap again from January 27th right there, top of the gap. The gap was backfilled and tested on 4 separate days. Gapped above it, that's a breakout, and it's built on those gains today, although that candle's a little deceptive. It's green only because we're still trading positive, but we're almost flat. So by the time you get this video out, we could have gone red. And now look, a red close today isn't going to really be anything technically significant. From this point in time, the only thing as far as a bearish event, again, looking at this chart, especially QQQ, you have to factor in what SPY is doing. On this daily chart, at least, nothing but bullish price action because we gapped up and we built on those gains today so far. You have a potential bullish cross here. So the only thing to, at this point, that I would see in the near term to give you a pretty objective, high probability short entry would be a break, solid move back down below that 222-ish or 223-ish level. I have it at 222.87, again, the top of the gap. And the trend line, which also comes in together. Again, this is that the trend line off the October 3rd lows. And remember, we had some near term. This was a short-term sell signal, but we fell to this much more significant trend line. When you have trend lines here, you have a little trend line that only lasts a few weeks. Same one I was highlighting on the 60-minute chart. Gives you a small sell signal. And that was good for about a 4% or so drop, I believe, off the highs there. So short-term trend line, short-term sell signal. This is a much more significant longer term trend line. That would give you an intermediate term or a longer term sell signal if and when broken, but we're well above it. And remember, there's been nothing but successful defenses of that level, so we never had those additional sell signals that would have, at least, for me, brought me to either a full or a more aggressive short position, targeting those additional targets that I had there recently. So that's it. And if you're bullish and want to go long, well, you could step in today. If you get a pullback to backtest 220, 287, that would most certainly be objective. There's a lot of ways to trade, but that would be an objective level, or the next test of the trend line. And if you went long on the breakout, or you're long today, then you set a stop somewhat below those levels. That's where for a swing trade on the long, again, doesn't fit my type of trade. I don't see the risk reward being that attractive, especially with the extreme overbought conditions and some other things there. But just want to mention that's where you'd want to stop somewhere in there. Now let's zoom down to the shorter term charts and let's look at the futures, because I posted these earlier today. Lot that I see here in the 60-minute charts. This is NQ. By the way, somebody had asked a question on the homepage, requesting to put the symbol. When I flip out a futures charts, some of the charts I use do not have the symbol watermark in the middle, like the ones we were just looking at. Those are from TC2000. That's a charting program. We're on a different program here. However, every chart, even those TC2000 charts, has a symbol up here. So you see NQ. When you see this little infinity sign here, that means it's the continuous contract. On futures, they'll just continue to roll the contracts over and over. And the continuous is the next month contract, or the March contract there. That's the expiration date on the current continuous contract. And then again, you go back here and you can also see up in the upper left hand corner. So even when I go to my stockcharts.com charts, so I'll use some TD Ameritrade charts, TradingView, sometimes they're almost always up here in the upper left hand corner. Just wanted to make that clear. And back to NQ. So what happened with NQ? We had, I believe I pointed in last night's video, we had an uptrend line here to watch. We cracked below that uptrend line, but we did so while consolidating. We didn't have anything remotely close to an impulsive breakdown. We had what I referred to this morning as textbook bull flag action. Not a bull flag that I would take, not one that I was overly concerned with. Broke out. It was textbook breakout as well. As I mentioned on the homepage this morning, there's 3 components to a bull flag continuation pattern. Number one, and this happens to be a bullish pennant. Same thing. It's just a shape. Flag looks like this. Flag pattern, and the pennant takes the form of a sideways pennant like that, something along those lines. And the patterns are virtually identical. You have a flagpole, which is the impulsive move up leading up to the pattern, usually on above average volume, and it's impulsive meaning just almost straight up, kind of a little bit of an angle there, followed by a period of consolidation on usually diminished or decreasing volume, then followed by the breakout of the pattern. That's your next buy signal, and an impulsive move. Now, a textbook bull flag pattern will play out. You'll have the flagpole, which is this move leading up to the flag. The measured target and the move out of there should roughly mirror that. And so far what we have is a failed, pretty much a foiled breakout of the pattern. There was a breakout, probably looked convincing, almost certainly sucked in, or pulled in a lot of new longs there, but so far it's failed. That is not what you want to see. We're back testing the flag, as I said this morning. The fact that it moved back down and you don't have this steady, impulsive, run higher already kind of foiled the pattern. It's not really textbook anymore. In my opinion, it's not even in play. That doesn't mean we can't go up. It's just not a what you want to see coming out of a flag. You want to see a move that almost mirrors the flagpole. And the other thing I said this morning too is where it really usually this does the trick, drop down below the flag. Why is that? Well, if you were watching this, if you're a trader and you saw the bullish pennant right there and you took the long on that breakout right there, well, your stop could be anywhere along the lines, but usually it's going to be just below the flag, because you entered right here, somewhere in there, you're going to have a stop usually below the flag. So what usually happens is once we take out, clearly take out the bottom of flag, you get another pretty impulsive leg down, kind of like this one here. And as I often say, fewer things in trading are more bearish than a failed long side breakout. And I believe it's because of that reason. If you think about what goes on, a lot of longs jump in there, active traders, and once they realize they're wrong, they have to stop out. And to stop out, what do? You're selling your long position. So selling begets more selling is the stops are hit. So that's something to watch for today. Now, again, when I just started the daily charts, there's nothing there right now as a red flag. This is we'll call it a little yellow caution flag, and so we'll see how the day ends. Let's try not to read too much into it. That's what I'm doing as far as, I'm doing right now nothing as far as index shorts or any positions. It may change later today. There's your divergence, which I had said I wanted to see it confirmed. Had negative divergence conform all the time, but I call it confirmed divergence once you have effectively a lower high or lower peak in the PPO or MACD, and that's what we have. To get that, I want to see that bearish crossover, which we now have. So we have confirmed negative divergence. This high, there's your divergence line, was a divergent high. Last time that I can see on the 60-minute chart, you had pretty clean divergence, was right here. Right here at this point, there was your divergent high, and we dropped from there about 2%. Again, nothing much. Maybe we, reverse from here, maybe not, but it is divergence, and usually that's good for at least a pullback. And we've already had a little bit of a give back there, about 1.6%, but it could be more. Maybe not. Let's not spend too much time on it now. Like I said, right now more focused on how we close the end of the day on the daily charts, and then just flipping back over to ES. We were just looking at NQ. Remember, NQ is the NASDAQ, or are the NASDAQ 100 futures. ES are the S&P 500 futures. And you have an almost identical pattern. You have the impulsive leg up. That's your flagpole. So you take that distance, that line. You can, I'm not using a trend line drawing tool. I'm using the screen drawing tools. If I was using my, trend line, I would just click on the trend line, tell it to duplicate it or create a parallel line, drag it over here and add it to that. And that would give you an exact measured target, which of course is rough target, but I can tell you pretty often when these flags do play out, it quite often come right around to the measured target, and then that's the end of that at least initial thrust. So it's a good area to target if you are trading that. So what do you have here? Again, on ES, it is a textbook bull flag pattern. There's your flag right there. The flag usually takes the form of a downward sloping flag. Imagine a flag with not a lot of wind blowing that day. That's what the flag is going to usually look like there. And there's your breakout, but all of a sudden it hit the brakes. The ES is holding up a little better. You can see there's more profit taken on NQ, something to note. But again, if you start to see ES move down, especially below there, if that happens, based on where NQ is now, you'll probably see NQ move down below there as well. So these are only potential, let's say the next, potential bearish development, short-term stuff. So short-term, you can call it a little check mark for the bears, but not enough to, in my opinion, warrant, taking a short position right now or adding to any short positions, because of the fact that, the trend is still up and they've taken back this trend line here and everything else. And you can see ES is right off the previous highs right there as well. And so that is resistance. But usually when you get that close to the highs, you pop them, even if it's going to be a marginal new high. So again, like I said, just kind of watching near-term neutral on these indexes. And those are some things to watch for today. And like I said, most importantly, how we close. If the market doesn't give us a lot of clues today, let's say we go down a little bit, or close mostly flat, we'll just have to see how things go into tomorrow. But you can also see the negative divergence here on ES as well. Should we pull back? Charts aren't as clear now. I could probably give you a line here as far as support levels to look for, whether you're a long looking to buy a dip. I don't see any very well-defined support. Trading has been so choppy lately with the coronavirus and the technical breakdowns and the FANG earnings. You can just see all this choppy trading move up. Your divergences have been playing out. We did have a divergent low, as I highlighted here, positive or bullish divergence on the 60-minute was highlighted back at the time, and that was a catalyst for this move up. Those divergences did end up playing out, and based on the scope of the divergences, that could be, the end of the run, or they may have more to go. Remember, the primary trend is bullish, so when you get divergent lows in a bullish trend, it tends to play out for a bigger rally than the divergent highs play out for corrections, if that makes sense. You get in a bearish trend, a primary bearish trend, it can take a little divergent high on a 60-minute chart, can lead to much more. So that's where we're at, and let's move on to a few other things here. Let's start with crude. Since we have an official trade there, I'll get to the ETFs or ETNs in a second as well. I know that everyone doesn't trade futures, but I like to keep an eye. Remember, futures will paint the whole picture, the true story of what's going on with crude oil, because it's trading virtually around the clock. Whereas your ETFs and ETNs, you're only seeing part of the story. The regular session trades. So you had this bullish falling wedge pattern, you had a divergent low, and impulsive move. At one point today, I think we were up, I think it was maybe 4%. I know it was over 3. We're up 2.28 right now. I don't know if you can make it out just down here. So we're still up 2.25. And so what I see is a breakout. First resistance, I added this line today, I believe, since that earlier chart, about 51.88, because I noted a few reactions on that level there, around that level, give or take, call it 51.88, 52. So breakout, and we're currently back testing this trend line. Let me tighten it nice and tight to this top of this candle here, and that's it. So ideally, it is a breakout. Ideally, crude should reverse here. Sometimes when you backtest, you continue to backtest. But again, that would be the ideal bullish scenario. There's still a little bit more work to be done, but so far I like what I'm seeing in crude oil. Let me show you the yearly chart with the yearly candle, or daily chart with daily candlesticks. Then we'll get to the crude ETNs. Okay, this is the same daily chart that I've been posting on the homepage lately. I'm going to zoom it in a little bit here. And so what we're noting today is we have so far a bullish engulfing candle. A bullish engulfing candle, you don't have to engulf the entire candle, the previous candle, you only have to engulf the body. That's the fat part there. So far, and by a fair margin, we have a bullish engulfing candle. What does that mean? It means very little if it comes during a trend, but when you have after an extended downtrend, especially on or around support, that is a potential reversal stick. So step one is what I like to see. Some people go long just on a bullish engulfing candle, but you can do that. It works. I can tell you right now, that's a effective strategy with a stop somewhat below it, because you have no business dropping below. But even better, you want to increase the odds, get a follow-up green candle tomorrow, assuming we print. Remember, the day's not over. Crude is a volatile little sucker. It can turn on a dime, and this body changes. This whole shape of this candle, any candle can change before it's printed. So this candle is today's daily candle. So we'll have to see again how crude closes. But so far so good for both the daily, the bullish engulfing candle. Again, you can see it at support here. Go back to, let's pull it back a little farther. Let's go to 18 months there like we were at before. Not giving that to me, not loading. But you can see where, there it is. Slightly below, but close enough. That's what this market does. It likes to run, whether it's a new high in the market, it'll go to a marginal new high and then reverse. Or right here, you had resistance, popped above it, a fake out move, and then once again a marginal new high, and then the big reversal. So everyone, the old days of trading, you'd say, okay, this is a breakout and that should run. The algos do this. I don't know what happens, but you almost have to count on false breakouts now, especially when you're at a big resistance level and overbought. So there you had it. Again, a marginal new high, so technically, yes, you cleared the other high, but look, that was the top. So instead of going long like, yesteryear with a lot of these chart patterns, you almost have to count on the fake outs. And so I'm looking at the same way in reverse. You had a pretty well-defined level around 50 to 51, broke down below it. Now, had we done this, and look, we could still do this. I just want to say that. I don't think it's going to happen. If it does, that's what stops are for. I'm not going to ride crude down to 44, but if it had come down here and then consolidated for a while, worked off these extreme oversold conditions, and then broke down, it would, in my opinion, have a much higher chance of going a lot lower from there. The fact that it expended so much energy on the downside. In other words, it was so oversold to get here. There's that extreme oversold level. I'm making a mess of this chart. Let me grab my box tool and show you. Again, I highlighted this the other day. About the 20 level on the RSI. Normally anything 30 or less is considered oversold. As you can see, the last time crude was this oversold, or crude futures was right back here. Had a double tap reading at that level, came down and mounted a big rally from there. And so again, extremely oversold doesn't mean it can't go down. That's not a buy signal in itself. But when I see oversold coupled with a fall down to support, now we have bullish engulfing candle. We have a breakout on the 60-minute chart. And for the other reasons that I said, I'm viewing it as a quasi or an indirect hedge to any index shorts, which I may or may not keep for a little while here. Why? Because if the stock market keeps going up, that is showing that market participants believe that the economy is still strong, going to still grow, still growing now, and it's hard for me to imagine this 20-something% drop in crude. Yeah, there are some other supply demand dynamics that affect crude, but there's a 25% drop in just a few weeks in crude oil. That doesn't mesh with a strong, roaring economy and roaring stock market. So again, I think the downside in crude, or another way to say it, the risk reward is favorable. It all depends on how much how much you're looking for. You can see resistance. That'd be an ideal bounce target, and that also meshes with the targets I gave you on the 60-minute. I think I have a second or third target right around 54.80. So there's crude, and as a promise, I'll look at the USO. This time around, I went with that. Like I said, I gave you targets on UWT. I know a lot of you guys out there, guys and gals, like to trade the leverage ETFs, but we just, for this time around, kept it simple. Went with USO. And I did that also because I was trying to catch a bottom. If crude had consolidated and was pushing up against some other type of chart pattern, had a basing pattern, and I was looking for a breakout that was poised to run, this is a catch a falling knife trade. And what happens when you're pounding out a bottom in oil, or anything for that matter, what happens sometimes it's one and done, boom, boom, but sometimes you base for a little while and consolidate. So boom, we hit that level, went up, went down, went up, chopped around. This right here, this is when you don't want to hold UWT. This back and forth is where the decay happens. This is where you want to hold it a fairly unidirectional run, or let's say, I'm sorry, UWT is the bullish 3-time. DWT is the bearish crude. This is exactly when you want to hold, and you can tuck away. You can hold DWT for weeks or even months if you get a strong unidirectional run like this. And not only will you not have that decay people talk about that makes those quote unquote, according to them, those leverage ETFs so horrible. I've shared this many times. You will outperform what the underlying does. You'll do better. So the decay, there is no decay, works in your favor. And I'll show you. I always do this. I like to, and I haven't done it yet. I haven't checked these numbers before the video, but rarely does it not pan out unless there's some kind of distribution or dividend on one of these ETNs. So here's the top. Let's just that's the top candle right there. That is Monday, January 6th. USO, which does a pretty good job of tracking crude because it's a non-leverage ETN, 22% drop. You can see the pop-up box there on the left, down towards the bottom in red, 21.92%. So we'll call that 22% in a matter of 20 days. And now we go to DWT. So you would think 66% at best, right? If there was no decay. I'll grab that same January 26th candle. That was a high in USO, which is a low in DWT. And from there, 103%. So that again, you can do this over and over. So that's when you want to hold these things. And if I had confidence in this, if we're going to, in crude, if we're going to see that rally, I might have gone with the UWT. But again, I'll leave that up to you. We could get it. So far so good. Everything looks okay. But we may have to pound out a bottom here. This may not be a bottom, or it could be. Again, I think the risk reward was favorable enough, to warrant a trade in that. I'm not liking the reversal so far, but it didn't. Technically, it's not bad. It's just when you look at USO, you have a bullish falling wedge pattern in USO right here. There's your downtrend line. There's your divergence right there, positive divergence. You have a breakout via a gap up, and maybe it wants to come in and test it. Maybe it wants to undercut the lows. And these are just suggested stops. You can most certainly use a more liberal stop or a more aggressive stop. That is completely up to you. I base these stops based, relative to the price targets here. This one I actually might have even based it on the only T2, giving it a very favorable RR. If you're going to up to T3, I have to look at, revisit that, how I came up with that one. But I think it's a good target, and it's just below yesterday's lows, so we dodged that by a decent amount. And again, I use that one on a daily close. Why? Because I went over that before in the other trades. You get usually these washout moves with these long candlestick shadows or tails, followed by reversal. That's usually how the end of these sharp moves down come. And get an intraday reversal, and you close back well off the lows, even if you close down for the day. And so we haven't seen that yet. Doesn't mean that must happen, but it's something I'll be on the lookout for. And so if they take out this trade, if they happen to clip our stop, and then the trade turns around and does put in some very bullish, reversal candlesticks, gets back above the, on USO, call it around 1060, give or take. That's the support level there. And it's a little bit above that now. That would be bullish, and then we may re-enter that trade. So again, these are just trade suggestions. Take it, don't take it. Use the same targets, use different targets. Just showing you what I think are levels that I'm looking at, and where I think these trades offer objective entries, objective levels to take profits, and objective levels to use stop loss orders based on those price targets. And UGAS, the 3-time long natural gas ETN, similar pattern too. Sometimes this will move with crude, but it really marches to its own drum beat, even though they're pulling them both out of the same, a lot of cases, same wells. Boom, breakout, back test, leg up. But now it's more so consolidating here. I had before, this was the entry over that yellow line, but I added this level here about 47.32. I think that's a level to watch now. Why? Because I see reactions there, a lot of gaps in this area, and that was the most recent high. And so if I take a step back, what I see in my mind's eye here, or at least on the chart, is this little area of consolidation. And if we could continue to consolidate, but if we pop up, that should be the catalyst for a rally. And if we break down, we could get another leg down. Something else to note is that PPO is trying to cross that zero line. It'll be bullish if it gets above. Typically when it's below, and I'm talking about the white line, the signal line, that denotes a bearish trend. So we'll watch that. And again, those are the levels to keep an eye on. Natural gas futures, that's NG, very similar pattern as it should be. And you can see there we broke out of the downtrend line right there. There's your wedge pattern. We had divergence there. We extended it with a marginal new low right there, and so far so good. Breakout, broke the little price channel back test, which is of course an objective long entry if you didn't take it there. Moved up, and so now this is the level to watch. I think about 189 or so. You can see as I'm drawing a line to the left, lots of reactions from above there, some reactions from below, more reactions from below here, more reactions from below there, and some recent reactions. So that coincides with that level I just showed you on UGAS. So that would be, in my opinion, the next objective buy point or long entry or add-on if you're in that one. And of course, not so good if it takes out the lows. They'll still have positive divergence, but ideally you want to see it resolve from this, basing pattern here, and you want to see a pop to the upside there. And then, 195.4 level, I'll probably get a reaction there, maybe even for a while, maybe not. It all depends. That's how it works. Is we can get a reaction, we could blast on through it. If we blast through it with conviction, it opens the door to the next target, which is all the way up here, about 2096. That'd be a nice run in that gas if we get it. And if we do pop and get up there, I think we will probably get that, whether or not we consolidate first or not. So that's just one we'll have to keep an eye on. PPO is up above that zero line on nat gas futures here, by the way. And remember, I talk about this a lot. There's a lot of the futures contracts have micro and mini contracts now on natural gas. If that contract's a little too big, you trade futures. You know what they're about, how to trade them, what the risks are. You understand the leverage and how to roll them and all that good stuff. Then you can use QG. which is the mini contract. I think it's, if I'm not mistaken, a 1/10 of the size of natural gas. But what's nice, it trades out the same values. It just uses a smaller leverage factor, so I don't need to put up a chart of QG. It's going to show you the same price levels. NG is more liquid, but again, you can trade QG off these levels if that's your thing. Okay, and I mentioned PBYI the other day in a video. I just wanted to point out you guys that it was moving. I haven't updated in a while, but it's still an active trade. We took it, gosh, I think it was somewhere, one of these breakouts. I can't remember which level here. The bigger picture was we had a a downtrend line that was taken out right here, breakout, and I'm pretty certain we didn't take it on that breakout. I think I was waiting for a pop above one of these levels here. We had a breakout, a back test, and it's been an active trade since. It's avoided taking out our maximum stop right here, and I mentioned it the other day, starting to move. So here's there's one of those basing patterns I was just talking about. You can see, since it broke out, it's been basing in this range right here, and I view these things as like coiled springs, just like a falling wedge too, but on these sideways patterns, you're building energy here. And what usually happens is if you get an upside break, the longer the more compressed that spring is, the longer it's been trading in that range, and it can go either way. And that's where a stop would have or should have protected us if it broke to the downside, but it broke to the upside, and again took out the top of that range. And this is where you can see these little biotechs, they can run. Do not, and let me repeat, and I say it often, do not overestimate how overbought a biotech stock or a shipping stock or a marijuana stock can get. This thing was up 36% the other day. I think 30-something% yesterday, and it's up another 37% today. And it can be up another 37% tomorrow. Would not even surprise me. So I'm going to leave T2 as a final target for now. I think now that we've clearly put T1 in the rearview mirror, that resistance level there, you can see what that's all about, why it was there. You have support there, resistance, 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 so that defined that level. We did have a reaction on it today, or around it, I believe, and there it was, a little momentum fueled overshoot, traded on it, and that's where we're at now. We're continuing up. So as of now, looks good. If it pulls back in, then that's not a super well defined level, because we didn't get a solid reaction on the daily chart, any reaction so far on the daily chart at least. So you probably want a line right about here. Let me give you that line if you're looking for a re-entry. I'll tell you, with these biotechs, I can just tell you, I like them better when they just go. They usually, if they're going to go, if it's going to go up here, it usually does so quick. They don't let the longs in that didn't take it earlier on. That's usually how these guys play out. So to see it come back there, it is possible, but it may have more consolidation to do if it can't just power through here in the next few days and hit that second target there. So still an active trade, but again, like always, you decide whether you want to take profits. And I would say this, I would certainly suggest moving the stop up right now, and I just gave you levels, 1091 support level. You can set a stop a little below that. You can set a tight stop. There's many ways to do this. It all depends on your trading style. The tighter a stop, especially if it's a trailing stop, the higher the chance you're going to get that stop clipped on a slight pullback, even if the trade pans out. But on the flip side, the wider you stop you allow, the more profits you're going to get back if the trade then does reverse. In fact, it took me a while. After the open today, we were coming up here, we hadn't hit that target yet, and I took a screenshot and I started to compose a post to give you guys a heads up that it was getting close to T1, and by the time I even couldn't even finish that, it had hit T1. And there's another one like that too. I just want to give you a heads up on these active trades that are coming up to targets. Bitcoin continues to do well. I want to get to gold and silver in a second, but as far as risk-off assets, Bitcoin is just, this trade's been playing out nice and still continues to play out. We're coming up on the final target. That's why I wanted to update it. We went long on a breakup of 863, so that means any print of 864 or higher. So we're in at 864. I'm trying to grab 864 without moving the line. It's not cooperating. Close enough. 8644. So we're up about 35% on this one already, and we're coming up to that third and final target. And I just want to say this: If on these trades, I can't leave them all on. I have a hard enough time managing. There's still a bunch of completed trades and active trades or stopped out trades listed as active. I need to get to and clean those up. Always go by the notes on the trade, and what I mean by that, if you're not sure. Here, let me grab something over here. Go to, when you're looking at a trade, if I cover it in the video, or any posts on the front page, down below are these tags right here. So if you want to see all related posts in chronological order on that ticker, click on that tag. It's a linkable. All of these are links. So if you click on it, like Camping World, I updated that yesterday. It's all in there, and it'll bring back every post that I've made on Camping World, including this one. This is the trade idea for the one we're currently in, which I have to update it. We're up now 30-something%, as I mentioned in the video the other day. And I just wanted to mention that that's how you can, if you're new to the site especially, and hey, what's this Camping World trade? I hadn't heard about it before, and you want to see the parameters, go in here, Camping World trade idea. If I update it, which I did in these videos, that's why it's mentioned. You'll see the tag will be in each of these posts. These were updates along the way. First target hit. I told you guys the second target was hit the other day. And where I was going with this too, I kind of got off on a tangent there. These trades could continue on, and I usually share my thoughts whether I think a pullback is imminent. On Bitcoin, I expect a reaction on around that level. Remember, I set the price targets if it's an official trade and you see T1 equals, T2 equals, T3 equals, something like that. That is the adjusted target. You can see the line here is at 1195, and I have the target at 1183 because this is a trust similar to an ETF, but it's like a closed-end fund. It tracks Bitcoin, but it will trade at a premium or a discount to the value of Bitcoin. So I'll look at the futures BRR, try to trade that, and if all eyes are looking at 1195, I might want to sell that at 1183 and not try to squeeze out the last few cents, just in case the sellers step in early. So I wanted to point that out. And the other thing I wanted to mention, the chart is constructive. That's the 60-minute chart. That's where we base this trade off. But when you look at the daily chart, this is a constructive trade to me, and I think it very well has the potential to continue to run past my third target. Whether or not I add additional targets, that we'll see. Maybe I will, but I see a good level here. I'm going back all the way to the left of the chart. I'm seeing reactions that I'm showing you here. Reactions, 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 reactions. So 1222-ish. That should align roughly with that next target there, and we may get a decent pullback, or we may not. So where I'm going with this is you don't do what you want. I'm not telling you what to trade, not to trade, tell you what I'll do when I'm thinking on something. But if you are longer term bullish, or you don't know what to do, but hey, I'm in this one, I like it, Randy, I'm up 30-something%, and Bitcoin could run up here at the old highs right here, at least the 28.19 highs at $17. Then what you can do is just periodically raise your stops and let it run. Set a tight, relatively loose trailing stop. Bitcoin goes up and down, high single digits to double digits in a day. So what my point is here, if you're running a 2% trailing stop loss, you're going to get clipped out in the back and forth grind. You're going to need to give it a little bit more room. There's nothing wrong with running a 2% stop loss. Sometimes those work well when you have these sharp runs up with very little givebacks, but usually you're going to get this back and forth stuff along the way. And I just wanted to mention again, my point I was trying to make is, yeah, it's the final target. If I don't add an additional target before then, that's where I remove the trade. If you're a subscriber and you ask for an update after the trade's closed, I'll be glad to give it to you. Again, your choice if it gets there, if you want to book full profits or partial profits, full profits, or let the trade ride with a stop in place. Just at this point, being up that much, you don't want to let this thing run back down. And that's really even though I'm not officially raising that stop, or I might. Sometimes I'll go ahead and do that and tell you, raise it here, but you don't want to let that stock go back all the way there and get back that much in gains. You should have a stop somewhere at very least, just below that second price target right now. Okay, guys, this video went pretty long. I covered a few trade ideas here, things I'm watching. Oh, and the other thing, and I'm going to wrap it up right now. I just wanted to say gold, I don't have a strong opinion on now. It did break this little wedge on the daily chart. You can see that uptrend line. It's a decent but not a great uptrend line. We're below it, and we're below that 147-ish support. but I still view gold as being in a bull market. I don't think it's an objective long right here. My thoughts on gold, it's holding up relatively well, in fact very well, considering the market, considering the Nasdaq 100 at all-time highs. You would have thought that you'd see a lot more money coming out of that flight to safety bid in gold. So gold is in a bull market. There's no arguing that. I don't care who you are. We can argue about where we think it's going in the next year, or where the next 20-30% is. But when you look at it here, gold bottomed back in 2016. That was a low in December 2016. This is a bull market, and this is bull market action so far. Nothing goes up forever. Now again, where would I start to warm up for the next long entry in gold? I need to see more evidence of the stock market breaking down, and that started in the beginning of the video, what to look for in QQQ, break of the trend lines, things like that. Some solid bearish reversal candlesticks. Otherwise, a trend in the market's up now, so gold may have some more downside, and if it does, we'll revisit it here if it pulls back to any of these support levels. I just wanted to say again, I don't have my near-term convictions on gold or read on where it's going, not very strong, and unless the stock market starts to move down impulsively, you're probably not going to see a big leg up on gold, though it is possible. I've seen both rally. So let's just end it here. I just want to let you know that I'm not posting a lot of updates because I really, it's kind of a dead money trade. You can see it's kind of trading sideways for a while, and until the market does something different, it's probably going to do that, or maybe even continue to drift lower. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.